We're going to stay with Europe right now. Yes, things are getting better, but there are still some problems. In Italy, for example, banks still struggle with storing bad loans. That's leading to a credit crunch, which makes the recession in Italy worse. Jack Barton reports.
The Eurozone's economic recovery remains weak, but confidence is returning across the single currency area. Except in Italy, the bloc's third largest economy, where recession appears entrenched, the jobless rate is at a record high, and some of the biggest banks are in deep trouble.
If you look at the average banks like Monte Paschi and Banca Carige, the situation looks pretty ugly, also because the non-performing loans have been growing at a huge rate in the last year, 28% higher than 1 year ago, and the situation of the economy is not improving.
Last month, Italy experienced its first banking sector strike in more than a decade. In a country where compulsory redundancies were previously unheard of, Italy's biggest banks now plan to lay off 19,000 workers. Italy's biggest bank by assets, Intesa Sanpaolo, has reported a 47% decline in third quarter profit after it set aside money to cover bad debt. And banks, both big and small, are struggling to conform to the new Basel III rules, under which they must keep more money at hand as a financial safety net.
The banks right now are so concerned with meeting the Basel III criteria, and they're so intent on licking their own wounds that they're not really thinking of extending their lines of credit to these companies, which still form the backbone of this economy.
The banks are now preparing to sell nearly a quarter of bad loans by 2017. In the long term, it means the country's finance sector should return to health. For now, it means businesses and households will find it even more difficult to borrow money. Jack Barton, CCTV, Rome.